Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind company filings, and today we're getting a peek behind the curtain of Bowhead Specialty Holdings, Incorporated, how they raised a hefty sum of money and paid off some old debts. This is a Form 8K filing, which is like a company's way of saying, hey, the important stuff we need to tell you right now is happening. And for Bowhead Specialty Holdings Incorporated, the big news revolves around a significant financial move they've made. So what is the headline here? Well, Bowhead Specialty Holdings Incorporated, or the company as they call themselves, recently did a big deal. They brought in a cool $150 million by selling something called 7.75 0% senior notes due 2030. Think of these notes like ISS the company promises to pay back on a specific date, in this case the 1st of December 2030, with interest. The interest rate is set at 7.750% per year. To pull off this big note offering, they worked with some financial experts, specifically Keefe Bruyette and Woods Incorporated and Piper Sandler and Company, who helped them find buyers for these notes. The details of this arrangement are laid out in what they call an underwriting agreement. This is pretty standard stuff when a company wants to raise a lot of money from the public. Now, all these notes are governed by a really important legal document called an indenture. This is essentially the rulebook for the notes. It spells out exactly how the notes will be paid back, what happens if the company can't pay, and all the other nitty-gritty details. In this case, they have a base indenture and a first supplemental indenture, and together they form the main indenture. It is important to note that these notes are considered senior and unsecured. Senior means that if the company were to run into serious trouble, these note holders would get paid back before holders of other types of debt. Unsecured means there isn't a specific asset like a building or a piece of equipment tied directly to these notes as collateral. But here is where the story gets even more interesting, right? As they were closing this new note offering, Bowhead Specialty Holdings Incorporated also decided to take care of some older debts. They officially terminated and fully paid off all the money they owed under a credit agreement that was originally made back on the 22nd of April 2024. This means they cleared the slate with whatever loans or obligations were under that previous agreement. This payoff not only cleared their debt, but also meant that any security interests and guarantees associated with that old agreement were wiped out. So they're not only bringing in new money, but also shedding some old financial baggage. Looking at their structure, Bowhead Specialty Holdings Incorporated has common stock traded on the NYSE under the symbol BOW. This tells us they are a publicly traded company, which is why they have to file these reports with the Securities and Exchange Commission. The fact that they are an emerging growth company means they have access to some regulatory flexibility, which is something to keep in mind as they grow. The main point of this filing is to tell everyone about this new debt issuance, the 7.750% senior notes. They plan to use the money they got from selling these notes to help their insurance subsidiary grow its business. That's a smart move, investing in their own operations to hopefully generate more returns down the line. They also mentioned that some of the proceeds will be used for general corporate purposes, which is a catch, or for other business needs. Now, as we dig into the documents themselves, they've included a bunch of exhibits that provide the nitty-gritty details. We've got the underwriting agreement, the indenture that governs the notes, and even the actual form of the notes themselves. They also included legal opinions and consents for us. The most interesting parts will be the agreements that show how this deal was structured and what it means for the company and its investors. The notes themselves are pretty straightforward in concept. They're essentially a loan from the public to the company. The company promises to pay back the principal amount, which is $150 million in total, by the 1st of December 2030. They'll pay interest, of course, that 7.750% rate twice a year, on the 1st of June and the 1st of December. The first interest payment will be on the 1st of June 2026. This is a pretty long time horizon, so it shows the company is thinking about its long-term financing needs. The stated purpose of raising all this money is to fuel growth in their insurance subsidiary. This is a critical detail. It tells us that management sees a significant opportunity in this part of their business and is willing to take on debt to capitalize on it. Growing an insurance business often involves building reserves, expanding underwriting capacity, or acquiring new customers, which can all be capital intensive. By securing long-term fixed-rate debt, they've created a predictable cost of capital for this expansion. Now let's talk about this payoff of the old credit agreement. Clearing debts, especially those with potentially variable or higher interest rates, is almost always a positive sign. It simplifies their capital structure and reduces financial risk. If the old credit agreement had covenants or restrictions that were hindering their operations or future plans, retiring it is a strategic win. It also frees up any collateral that might have been pledged against those old loans. Looking at the broader picture, Bowhead Specialty Holdings Incorporated is making some bold moves. They are raising substantial capital to invest in growth, which is a sign of confidence from management. At the same time, they are tidying up their balance sheet by eliminating older debt. This suggests a well-thought out financial strategy aimed at both expansion and stability. The key risk to watch here is whether the investment in their insurance subsidiary will indeed generate the returns they anticipate. If the growth doesn't materialize as planned, they will still be on the hook for servicing this $150 million debt. Overall, Bowhead Specialty Holdings Incorporated appears to be taking deliberate steps to strengthen its financial position and fund expansion. They are using established financial instruments in a strategic way. The success of this strategy will hinge on the execution within their insurance business. Alright, that is our breakdown of Bowhead Specialty Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.